bell, the 26th. We have a full trading week ahead before we go into the final week of May and a shortened holiday week with Memorial Day next Monday. But let's get cracking. First things first, when it says risk in trading, please don't always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos, you know the deal. Social media, this is how you find me Monday, Friday for the Pulver Report, youtube.com/Chris Pulver. I appreciate everyone coming out. Check out the channel, like and subscribe, all the good stuff. Join me live. Also check out the Trading 101 video series. If you're following me the other social media stuff, you can email or you can message me on those directly. Facebook.com/RealChrisPulver, Instagram and Twitter, both verified at RealChrisPulver. Okie dokie. Let's get to the charts. We just opened pre-market here, or just opened market up. What? Just had opening bell. Pre-market was a little higher by less than $1 on the SPY, 418. I was looking at this 415 to 420 resistance level. Inside credit spread, Alibaba. This thing is annoying. So I think I lost on a credit spread last week, and here we are positive post earnings. But it doesn't matter. I'll go back to the index real quick. So the ETF, the SPY, 418. We have a melt up going on with very few stocks, but is dragging everything with it because of market cap and how big they are. The Q's up 336. We had this big breakout above 322. Our straddles worked out pretty nicely. You know, we took a couple bear call spreads. Those didn't work out, but we have a straddle that's working out well where it was directionally neutral. I'm still looking to kind of straddle it just because, I mean, is it just due to go? Is it just going to keep going? I don't know. Part of me thinks that this could be a bull trap waiting to happen. The other part of me thinks that maybe this is a larger reversal pattern. And so a pullback is very likely. I'm just wondering what levels we could look to offer a buy trade. You know, if we have a pullback here that doesn't take out the lows, we could pull back into, let's say, 300. We could pull back as deep as 280. You know, here's your left structure, here's your right structure. That would be an excellent bottoming pattern for this to go into, you know, this would be 2024 trading, most likely. So, you know, we have done a pretty good job of thwarting the big concern, and everyone's worried about the recession / we already have one, or we don't. Is the Fed going to acknowledge we have one? What's the economy going to do? There's a slowdown. Is it non-U.S.? What about the banks? You know, I mean, you may have heard the phrase wall of worry, and that's essentially what we're in. It's like the markets are still doing well, and you have to remember that even if we have a recession, the markets and assets can still go up. Even if we have this, you know, all this uncertainty and markets in turmoil and all these crazy bearish headlines or things that are scaring people, the market can still be up, right? So the economy does not necessarily reflect the stock market. It should, you know, in some capacity, earnings, interest rates, macro environment, it should, but certainly there are times where it does not, right? So like I said, market cap, I mean, the weights are ridiculous. You've got pretty much 5 companies that are single-handedly bringing everything with it. If you go to this I thought was interesting. Here is the S&P 500. This is equal weighted. So if you take away the market cap weighted and you go equal weighted, look at where we are for the year. Look at where we are for the year. So here's the start of the year. This is the yearly pivot. So the yearly pivot is right here. And this is where we're currently sitting with equal weighted S&P, right? It's not up 8, 9, 10% like the SPY is. Right? But it's not equal weighted. The SPY isn't, at least. So it just kind of shows that, you know, we have certain stocks that are leading the way. This is the NASDAQ top 100 equal weighted. Same thing. Now, this one has a little bit more of a head start. You know, tech has performed better because it was beat up so badly last year, but we're still up around 12% versus looking at the QQQ, which if you go market cap weighted from the lows of the year, I mean, that's where you get the argument that we're in a bull market. Qs are up 27% versus the equal weighted up about 12%. So pretty fascinating stuff. But it is what it is. You know, whatever instruments you're trading, there's movement. Currency wise, this morning I had a chart alarm go off on Euro Swiss. Swiss is coming back down, which I like to see. I'm not sure if there's any news to kick off this week. Let's go to the calendar. See what's. I know we have a bunch of Fed speakers this week. We'll go to this week and take a look. CAD Bank holiday, that's today. Low impact news for today. PMI numbers out of the Eurozone. We have France, Germany, Eurozone. PMI numbers, UK PMI numbers. We have flash services PMI of the US as well. That's 945. Don't overlook this stuff. I mean, I know it says low impact here for FOMC members speaking, but if we have several of them chirping, there is a rate decision coming up in June. I think it's June 13th. And let's take a look at the Fed Watch tool really quickly. Fed Watch tool. Let's see here. They're looking for a pause. Okay. So the higher probability is still a pause. This has been shifting a little bit from last week. It was down as low as like 50%, 50, 55%. And then you can see that it's favoring a pause once again. So no rate hike is likely in the cards for the June 14th meeting. So pause. September is now higher probability with a pause as well. And then November, December is still offering those potential cuts. So here's your higher probability of a cut in November as well as December. So 25 basis points November, December, possibly carrying on through the rest of 2024. 2024 could be a very interesting year for a lot of rate cuts. 25 basis points if it was 1, 2, 3, 4, 5, 6, 7, 8. If you had 8 meetings by the FOMC, 25 basis points each, that'd be a 2% cut for the year, which really puts us back by the end of the year. If inflation is under control, that brings the Fed funds rate down to about 3%. Inflation gets back below the 2% target, and then all is well. Could that be the soft landing that the Fed is trying to navigate? Possibly. Okay. So it'll be interesting if it's that simple and that straightforward and the market can kind of move past it, or if it's just lots of drama and every month it changes and this probability thing keeps going crazy and haywire. We'll figure it out. Okay, let me check some comments here. Ranjit, good morning. Donna, good morning. Gary, good morning. Jacob, good morning. Bill, what's happening? How are you? Good to see you. Chris is here. And Barbara, what's up? Let's see, monthly 77 RSI, your thoughts? Yeah, I'll take a look. Let me go the Swiss yen. So Swiss yen up to some highs, 154. And this is what I would be looking for, absolutely. Again, you got to be careful. It is a yen cross. I wasn't interested in calling the top here, but I think if we had a trend line break, I'm seeing some obvious divergence. We're getting some overbought conditions on the higher time frame. This is the daily time frame. So daily time frame divergence, I like it. Weekly time frame, you can see the weekly as well has stretched from this high back in October of last year. So this high, divergence. We were overbought and we're getting back into overbought with possible hidden bearish divergence. So, and again, the reason I don't want to step in front of this is we've obviously seen some stubborn moves in the past if this is just going to go to open space. But I will say that this is a pretty good spot for, a high to a low and then putting in a topping pattern, and the Swiss yen drops a lot. So if we're actively aware of a potential bearish pattern, and this would be what I look for now. I was watching for it to break these lows. It never did. Looking for it to break this low. I mean, we've got a fall. We've had 1, 2, 3, 4, 5, 6, 7, 7 bullish candles in a row. All I would look for now is either a stop sell below this weekly pivot or a more aggressive trend line on a smaller time frame. Just take a trend line like here, look for price action, stop loss above, and then target, this low, planning this to be a topping pattern of some sort, and then an unravel. And if we just range, I mean, we could go back down to around 138 to 139, around numbers 140. But this sets up pretty well for a pretty large reward to risk. I mean, there should be about 1,000 pips or more in that sell-off if and when we get confirmation. Yep. So that's what I'm looking for. Just waiting for a trend line break. We'll talk about that this week in the Flex Room. FK, good morning. Catherine, good morning. Perry, good morning. Barbara, what's happening? Yeah, you're welcome. That was a good question. And I've been watching this one too. Euro Swiss chart alarm went off for me overnight. We're sitting here at 97. We tested these lows. I'm looking to see if this area will continue to hold. Is this enough to break a trend line, eventually having the Swiss get a little bit weaker? This is what I'd like to see. I'm still holding long against the Swiss for some positive swap on a lot of positions. So my Aussie Swiss has pulled back a little bit. My CAD Swiss, which broke recent highs, has pulled back a little bit. The Euro Swiss I just showed, the Pound Swiss has been holding that 110, 115 level, or the 110, 110.50 level. New Zealand Swiss had a run last week, testing the highs at 56.80. The dollar Swiss pulling back, but we are on the right-hand side of the trend line. If this is in fact a falling wedge, then I'm looking for dollar Swiss to continue to head up towards 94, 94.50. We have a yearly pivot, we have monthly pivots, we have pockets. So I still like the technicals on a lot of these Swiss pairs. I'm just holding positions, enjoying some positive swap, looking for the technicals to align, give me some confirmations with my, directional strategies, and then start to add more to it. Okay. All right. What do we have this week? I know we have some earnings. It's not a ton. We have like less than 200 companies reporting earnings this week. For the most part, earnings have been up and positive. I think this is something that I followed with Charlie Bolello. He does a pretty good job with Y charts and just tracking everything. He's a huge macro guy. So I think there's only 200 companies or less reporting earnings this week, but there's some pretty notable ones. Let me see if I can find them. Notable earnings this week. Okay. Let's do this. See if this will show it. That's news. Here we go. So let me take a look at some notables. BJ Wholesale, Dick's Sporting Goods, Lowe's for retail, Toll Brothers, that's housing. Some more retail, Kohl's and Guess, Abercrombie Fitch, American Eagle Outfitters, Snowflake for some cloud computing, NVIDIA for semiconductors, Best Buy retail, Dollar Tree retail, Burlington Stores retail, Ulta Beauty retail, Costco, call it grocery retail, everything, whatever. Yeah, Big Lots retail. So I'm trying to think. It says 155 companies reporting, NVIDIA, Snowflake. Yeah. So here's a screenshot. I'll post this in the chat. So let me grab a screenshot really quickly. Okay, turn this into a hyperlink. I'll post this in the chat. So we'll probably focus on some of these. One thing that's been a little frustrating trading options so far this year, just some really simple strategies, is early assignments. So we talked about this last week in the equities on demand trading room. I'm looking to audible a little bit to just avoid some of those paper cuts. I mean, there are certainly stocks that I like and I want to own, and I have a handful of stocks that I own right now that I'm really happy with. Cost basis is pretty low, but just if we're getting assigned early and I don't want the assignment, it really just, I'd rather just take the loss in the credit spread, take a, 50, 55, or like 50, 45, 40 cent loss. If it's a dollar spread, or sometimes we have 50-cent spreads, we take a 25 to 30 cent loss. It's not a big deal. And then, when these stocks end up getting us paid, we have a lot that we're looking for, $5 a share. I think I added in cover calls on KHC this last week. Yeah, I mean, SLV, we've got $7-8 a share. We'll have some that we're going to hold out for $10+ a share. So it will be fine. It's just getting assigned early and not having the stock in a spot that you want to own it is not really that great. So we're going to switch it up a little bit. But anyway, all right, here's the chat. This is earnings. I'll put notable earnings this week. 155 companies. And that link should work in the chat. Okay, so have a look at that. Let's go dollar index really quickly. So dollar index is still stalling off a nice little bullish move. If this is a channel, I'm looking for the dollar index to continue to show some strength. This whole, the saying sell in May, go away. We have yet to really see it. It's been kind of stall in May, don't go anywhere. So if we're melting up a little bit like the Qs have done, big tech has done this as well. I'm curious if there's some pretty heavy profit taking to kind of retreat or give back some. One thing I'd be interested in looking at by the end of the month would be a monthly candle, right? I mean, look at this. If this is accurate, I mean, look at this candle. If this is accurate, this is pretty crazy. Look at this monthly wick low. That is the bulls just fighting back in a big way, or the bears just being absent. So, I mean, we hit lows at 400, 403, and we've rallied all the way up to 419. That's a pretty amazing monthly candle. But what I was going to get at was, let's say that the body of this candle, which is now green, let's say that it forms a very thin body, and all of a sudden it's a long wick like this. I mean, that would be a big indecision candle. I think that would probably have to play out for the rest of the year. Summer trading is likely going to be slow. The melt up may continue, but rarely do we see a lot of direction through June, July, and August. A lot of times it's, September, October through December, we have another big push coming in stocks. So that's where you get the saying sell in May, go away. So if we have, this push up and then the very end of May is a big profit taking, maybe we just kind of sit here and hang out and then we see what the summer gives us. But between, the monthly and weekly candles I'm watching, pretty closely. Last week's candle was pretty decisive. Same thing for the Qs, very decisive weekly candle. Have we had any overbought conditions yet? Let me check. I mean, not really. I mean, I'm seeing some divergence here with momentum. We haven't quite hit overbought conditions yet. There's a couple weekly pivots in a row. I could see a little bit of a stall happening this week, but again, just not forcing trades. This is why we put a lot of straddles on where if the market's up, we make money. If the market's down, we make money. Worst case scenarios, we go sideways. But a lot of times we, have played those levels out pretty nice, so we give ourselves some time and things work out. Okay, so those are the indices. Dollar index, I'll go back to this for a second. I'm still looking for dollar strength to continue up to this yellow zone around 105, 106. Oil, which is hanging out around $70 or so. We're trading at 71.50 on oil. Big support around $63 to $65. Resistance right now sitting at the 200 EMA around 80, with a yearly pivot up here for a possible squeeze at 90. We'll see. Summer demand, if people are still traveling, flight demand. I mean, we had a big pop in airlines last week with some risk appetite. Delta's up off the lows. I mean, 32 and change all the way up to 36. It's a pretty good move. Southwest isn't getting the same type of love. Disney crossing 90. Okay, what's up with Disney? Disney down. Okay, good. I mean, good for like opportunities. I'm looking for Disney to be something we could base around like $80 to $85. We might start looking at some Disney credit spreads as well this week. If it comes low enough, chart alarms are set. I've got an 85 level. I wouldn't mind having some Disney. At least some opportunities to push it out to the rest of the year. What else do we have? NVIDIA, some of these semiconductor plays. I mean, NVIDIA just busted out here. That's why we have the straddle. So if we're above 285, we're making profit. That seems to be the play right now. NVIDIA might come all the way back up to this high back in 21, which is around 350, 347 or so. AMD, this is advanced micro devices, also well up on the year. Still has some room to run. So, I mean, a lot of these semiconductor plays, I mean, something like this with a trend line. If we're staying intact with this bullish trend, I mean, looking to buy dips, and we'll see if this is just a steady trend. And if it has a big capitulation move, great. If you're part of that, make sure you're protecting profit, whether ready for a pullback or so. But AMD still has room to run. Micron's another one. I think Micron had some issues with China lately, so this one's not the same, but kind of the same takeoff early on. If we have a trend line like so, as long as that trend line stays intact, I'd be buying dips. Or at least looking for, I mean, I trade a lot of options, so like buying dips and doing, long calls or credit spreads, things like that, to try to take a bullish position if we have a good spot. All right, so oil, gold, silver. Let's take a look at gold. 17 or 1973. So gold recently took out these lows. Okay, so if this is high, low, lower high, lower low, and we pull back in gold, I've said this for the last couple of months. One of the big correlations we're looking for this year is dollar. If the dollar index, the DXY, is up, I would expect gold to drop, silver to drop, oil to struggle, Bitcoin probably to drop, stock market to drop. Now, I say stock market with that emphasis because it's been dollar strength and stock market melt up, which is usually not the case. Now, as we get into this Fed pause cycle, this is a big question mark, is will the dollar continue to show some strength on the technical side, or if the dollar gets weaker, then that still gives room for markets to lift up. And this whole debt ceiling thing that we might have some conclusion in the next couple of weeks. I think June 1 that's what Janet Yellen keeps talking about for, the Fed needs, not Fed, but fiscal policy wise, Congress essentially needs to vote to raise the debt ceiling. If they have something approved, it's probably to the tune of $1 trillion to $1.5 trillion. That fresh round of debt for the U.S., I would think would weaken the dollar. Okay. So we could have a quick, strong move in the dollar just to make technically good, and then as the debt ceiling and stuff gets resolved, the dollar gets softer. Now, I think a weaker dollar also gives way to stronger stock market, stronger asset rallies, commodity rallies, and also non-US strength. So I'm still looking for China. I'm still looking for anything non-US. The MIXI is one, MSCI, or is it MCI? This one. Is it? No. It's some world index. MSCI. Is this it? I don't think this is it. No, no, no. What am I thinking of? It's some four-letter word that's appropriate. MCSI. I'm thinking it's this one because it's the MIXI. It doesn't matter. I'll figure it out. But there's essentially it's a non-US based a tracker. So if we're looking for growth, a lot of times it's non-US. One thing I also was reading over the weekend, the old Nikkei 225. Take a look at this. The Nikkei 225 for the first time in 30 years, ladies and gentlemen. Look at this. We're back up to the same levels here back in the 90s. So we still have, this is the peak back here in 89, but it's still back up to the highs. I mean, this has been a strong start to the year for Japan. Again, non-US growth. And I wonder if there's legs to this. Is this, wave 1, 2, 3, 4, 5? Or maybe this is 1, 2, 3, 4, 5. We're coming back to a same height. There could be some consolidation. So I'll be watching this. I mean, one thing that would make sense to me technically with the Nikkei is if we're going to stall. I mean, take a look. This is a daily time frame showing some overbought conditions. We have lots of gaps as well. If we stall on the Nikkei and this thing drops, even if it's range bound, that should yield a stronger Japanese yen. Should. Now, we know that the BOJ is pretty extreme in their monetary policy, but if it breaks higher, pulls back, I mean, sure, we might be going back to those 1989 highs, and for the first time, literally in 30 plus years, we're making a new high in the index. But if it holds here and falls back down, level 1, level 2, and it just becomes a big range. So I thought that was pretty interesting that this has been just on a rip the last couple of months. And from the start of the year, which is pretty much the bottom here, this index is up about 20.5%. Silver pulling back. I still like this channel. I drew this last week. So if we have price coming back into this area, I'm still looking to buy silver. I like resistance around 29 to 30. Bitcoin, obviously watching everything Bitcoin related, tracking the big levels. We're trading at 27. We haven't broken 31. That's the big milestone. If we break 31, I think there's fresh highs coming. We might have a big rally and rip up towards 68 plus. I think if we make another run through the 68,000 mark and get to some fresh all-time highs, I think that rally could take us up close to 100. There might be enough speculation and herd moving that everyone could be long Bitcoin, participate, and we could see 100 grand. But before we see that, this might just be consolidating here between 20 and 30K. So I still like buying dips if we get filled at 20K. I'm going to keep buying little stabs, dollar cost averaging in, just build my cost basis around that 20K mark. Okay. Any charts you'd like me to take a look at? Anything in particular? NASDAQ futures, that usually comes up in the mornings, 13,915. We've got a pretty clear breakout. I'm looking to follow some dips. Again, candles green on the day. It could just be, kind of bull flag and the melt up continues. This full week of trading with no interruption could just be path of least resistance. I think there's certainly an absence of sellers going on. The market is being dragged up by very few stocks, but there's enough volume pumping those stocks that their market cap is so large, they are so large that they're dragging these ETFs with it. So anyway, that seems to be the case. But this week's trading all week long, we'll probably have some Fed speakers making some headlines. There might be some debt ceiling stuff coming out. Next week, Monday is Monday's a holiday in the U.S. Shortened trading week. We finish the month on the 31st on Wednesday. We should have non-farm on Friday the 2nd. If it's not the 2nd, it's going to be the 9th. But it's debt ceiling, some U.S. news, some Fed speakers, and we wrap up the month of May. Right? So if this is our pre-summer push, it's been going on. We've had a nice little melt up in stocks. For the most part, I'll say ETFs. Not every stock has performed well. We've had about 15 to 20% of stocks do really, really well, and then the other 80% just kind of hanging in there. I mean, we've looked at a lot of stuff in equities on demand, and we've tracked stocks that are at fresh lows. So stocks that I like, oops, Oh, that's not the symbol. CCL. I'm holding some CCL with a break even around $11. And I'm holding some Under Armour with a break even around $7. Holding some KHC with a break even around 37.50. Holding some KDP with some break even around 32, and it's also protected to the downside. What else are we holding? Got some BSAC, which is a non-US bank stock, break even around $17. Anything else? That's about it. I still have SoFi trading at 506. I still have Rocket trading at $8. SoFi, I've had a couple of assignments. I've lowered my cost basis to probably about $6 and change, but I've taken losses on this one, so I need to probably make up about 2 grand well, I take that back. I mean, I'm net positive like $1,000 on SoFi in the last year, partly because of the SPAC play in 2020. Had some decent jumps in here when I bought it, lower on $5, made a few dollars there. But I've just taken some losses, try to keep my cost basis low. If this hits the yearly pivot at 850 or hits our, SPAC opening level at $10, longer term, I'd obviously like to say that SoFi can hold and get back to, $20, $22. I just don't know if the bank drama happening is going to affect this or the student loan delays will affect this. I'm sure all the above. Interest rates certainly affecting this as well. But that's it. Currency wise this week, we'll keep our eyes on things. It's not a super crazy calendar. If we go to the Forex Factory here, it's not a crazy calendar, like I said. What else? Let's go this week and check out all the high impact. So PMI numbers coming. We have some PCE, I think that's consumer spending. Cash rate decision for RBNZ on Tuesday night. So that's going to be Wednesday's trading day. Expected to raise rates another 25 basis points. Okay. That might be a dovish hike if possible. We'll see. Depends on their inflation levels. I know that the New Zealand dollar was beat down really badly last week. The week before was the inflation expectations. CPI data for the pound. Okay, that'll be something to watch. Bank of England speakers, FOMC meeting minutes. So we have Fed speakers along with the meeting minutes on Wednesday at 2 p.m., GDP and unemployment claims on Thursday, and then here's your core PCE, which is good for consumer expenditures. So is the consumer still strong? And this is probably the biggest factor for a soft recession or a soft landing, is if the consumer remains spending. If the consumer spends, that's 70% of the U.S. GDP. So if the consumers are stretched thin, starting to scale back, which a lot of the retailers where we have a lot of that might be just pretty much visible this week. If retail sales or retail earnings are decent, but guidance is very cautious, then I think, companies are bracing for the consumer to scale back a little bit. Larger projects, Home Depot, Lowe's, your big house projects, your big expenditures, those are certainly slowing down. That's also helped prices come down a little bit in a lot of areas, though many of you may not feel that or see it. It is happening just as far as the data goes. But personal consumption expenditures is a big one to watch for Friday. Just another piece in the inflation story, and PCE is really what the Fed is focused on now versus CPI. Okay, so for everyone watching, do me a favor. I'm going to switch gears here. Go to Equities on Demand for the trading room at 10 o'clock. If you would click the thumbs up button for me, like the channel. If you haven't subscribed, please do subscribe. We do this every Monday and Friday. If I'm not live, I try to post a video. Check out the Trading 101 series. And if you have any questions or any comments on that stuff, let me know. I can do other videos. I just try to keep it consistent, doing some live sessions during the week to complement the trading rooms and spend some time together. Okie dokie. All right, sounds good, everybody. Thanks, Gary. Thanks, David. Thanks, Barbara. Thanks, Perry. Nice to see everybody. Thanks for being here, and I'll see you this week in the trading rooms. All right, take care. Bye.